Hello and welcome back to Bunnex Investment Group. In this video, we are going to be talking about a very simple trading strategy, which is basically a 1-minute scalping strategy. So, if done properly, one can actually acquire a high win rate or accuracy rate, and it's very easy that anyone can actually apply it. So, without wasting much of your time, let's actually jump into the content. So, the time frame of analysis will be 1-minute time frame. And what we'll be looking for is basically a double top or double bottom. We would love to call it M's or W's. However, M's or W's on the 1-minute time frame are a bit difficult to follow up since they are easily violated. So how do we go around that fact? The first thing that we need to see is actually to see a flow against that M, or in fact, if we are in a downward context, against a W. So in this case, what we are saying is we can see that there's this flow that we need to see before we reach this particular zone, whereby we are going to have a double hit of the same region like that. After having this double hit of the same region, we actually need to see a break of the neckline. So the neckline is basically a point where we have a turning point of the first leg to the second leg, like so. This is the neckline of the pattern. So we need to see break of this level and then a retest of the same level like that. So spotting this will actually require you to be on charts most of the times. As any other scalping strategy, you need to sit in front of your charts for long periods of time and have at least a minimum number of trades that you are going to be taking on each and every day. So in this case, we can see that this was the neckline, and after that we saw break of the neckline and then retest of the neckline. That is where we actually give our entry shot. In this case, our stop loss will be probably above structure or above the last week that has been issued at this zone, and try to get a 2:1 reward to risk ratio from the stop loss that you have obtained. So in this case, we would actually say this should be actually the take profit should be 2 times the stop loss, like that. So let's actually go over the charts to see how this is done in practical markets. So I've already gone through the markups, and these are probably during the time of recording is a day after yesterday, and in this case the date was probably 22 February 2022. So in this case, we are going to look at what we were illustrating on that model. The first thing that we've said is actually to see this move, the upward move like that, before a pattern is presented. We can see that at this zone, the market actually touched the same point 1, 2 like that, and created this neckline. The next thing is now to see break of this neckline, which happened on this candle. After the neckline was broken, we can see the market actually testing that same neckline. So the stop loss was obviously above this week, and then we can see the market actually gave us another retest of the same zone, and we were in a sell trade like that. So basically that's what we were going to be looking for. Let's have another example. In this case, we can see the market is actually going downwards, right? find a pattern, right? After that, we can see this M. So is this M a valid M? Yes or no? If it's yes, we need to see an upward move like that to reach that particular pattern to validate it. After validation of that particular pattern, we need to see a neckline and breaking of that neckline, which happened at this point. Then the market came back to retest the neckline and our stop loss above structure like that, and we can see the market went down properly. So in this case, we may see this as a pattern, right? We want to get a condition whereby we do not validate a pattern. So in this case, we had this as a pattern whereby we had a W like that. So this W was actually validated with the first rule that we saw a downward move, but then we couldn't get an entry because we wanted a break of this neckline and then a retest of that neckline like that to get a buy trade. Then we went down again. In this case, we saw this double bottom or a W. So in that W, was it valid? Yes or no? We had this downward move first. After a downward move was issued, we saw this breaking of the neckline at this point, which was done here, and then the market came back to retest, right? It gave another retest to go up like that. So I'm not saying this strategy is not going to have losses. It's just a fact that the point or the time that we were actually analyzing was actually conducive for this particular strategy. So of course you have some losses and they are painful, but you should always have calculated risk. On that note, we come to the end of this video. Thank you for watching, and check out our free course using the link in the description box below.